Welcome back. New jobs numbers were released by StatsCan half an hour ago. They show Canada's rate of unemployment jumped to 6.8% in November. The numbers could increase the chances of a 50 basis point rate cut by the Bank of Canada later this month. To help us break down the numbers, we're joined now by Desjardins, chief economist at Deloitte Canada. Don, thanks a lot, as always, for being here.
Oh, my pleasure.
Let's just show viewers once again what StatsCan has reported. The aggregate jobs number, the addition to employment in Canada, was 50,500 jobs. That is a pretty big number. Don will do a better job than me of quantifying it. It is 25,500 more jobs than expected. The expectation was for 25,000 jobs even to be added to the Canadian economy in November. However, despite the big jump in employment on an aggregate basis, the rate of unemployment has moved higher to 6.8%, significantly higher, I think, than the 6.6% that was expected. Wage growth, meanwhile, receded in terms of its annual pace. It came in at 3.9%, and what was expected there was 4.7%. Don, how do we make sense of these numbers? Is this the immigration effect again affecting these numbers?
Well, we certainly continue to see large increases in our labor force. That will peter out as we go through the course of 2025. But currently, that is, a significant driver. And so even though we had a pretty robust gain, I would say, for employment, and when we dig into the employment numbers, a lot of that was in the public sector, healthcare, education. So that was it was really quite significant. It was 45,000 in the public sector of the 51, arguably, thousand jobs created. So private sector employment, not as robust. And then you see the unemployment rate move up. And we've seen wage growth decelerate. Now, this has been elevated for a long period of time. So I think from the bank's point of view, these might be saying, okay, maybe we might have to do that, another jumbo. I mean, that's not our baseline. We tended to believe that they would go by 25, but this kind of piles on to other recent data that suggests that maybe they will.
And the market seems to be taking that view. The market, as of right now, according to Bloomberg, is pricing in an 80% chance of a 50 basis point rate cut. So specifically what the market is pricing in is a 100% chance of a 25 basis point rate cut by the Bank of Canada, and an 80% chance that the bank goes further with another 25 basis points, equaling half a percentage point. That is, regardless of today's data, that's not your base case.
Well, I mean, that wasn't our base case,
right,
let's put it that way. It is a bit hard to argue with the market on this, because even when we look at the GDP numbers we got, show growth in the economy, which was quite weak compared to what the bank had been expecting. Yes, the interest rate sensitive parts of our economy seem to be doing a bit better, so that was an absolute positive. But when we looked at things like business investment, really significantly softer. And that is, of course, of concern. And so we're looking at an economy now that, is it really growing on, all cylinders? No. And would the Bank of Canada want to see some broadening out? Now, we also have huge uncertainty facing Canadian businesses at the moment. So rate cuts will help mitigate some of that uncertainty, but won't offset it.
What would the Bank of Canada like to see in employment in employment trends?
Well, I think, this is a big number, but it's more the unemployment rate too. And I think they would want to see it more evenly dispersed throughout the economy, not being concentrated in one sector or another. Now, we know we need significant increases in healthcare employment, so that it does make sense. But when we look at other details, manufacturing employment came down. That's not necessarily what you want to see. You want to see a broad-based growth in employment as we go, as we move forward. So I think for them, they're going to be really watching this. Now, construction employment picked up, so that might be commensurate with the pickup we've seen recently in activity in the real estate market.
What do you think of wage growth decelerating by a full 100 basis points from October to November in terms of the annual pace of wage growth? It came in at 3.9%. It was 4.9% in October, and economists expected a much more modest deceleration.
Yeah, that has been really sticky. And it is one of those factors that when we're thinking about what is driving inflation in Canada, it has been the services, which is largely the wage components. So I think the bank will take some solace from this, saying, okay, so maybe some of these service sector wage increases that price increases we've been seeing, maybe they're going to moderate now in line with the wages, because the wages have been growing pretty hot up until today.
Can we finish with your view on the Canadian dollar, which has plunged not really on these numbers,
No.
but on what has happened largely south of the border? We're now at our lowest loonie in about 4.5 years.
Yeah, we do see the prospect of